GM everybody, it's Blake here with Trade Tracer. As always, none of this is financial advice. Trade and invest at your own risk. This video is designed to help you get prepared for this week's trading and give you a little bit of insight as to how I'm reading the market. So let's get started here. We have the S&P 500 pulled up here on a daily time frame, and you guys can see we are in a downtrend. Prices below the cloud. So those of you that follow us, you know we've had two uptrends this year. We had one back in late January, early February, and then we had a nice one that paid in mid March, rolling into the end of March. After that was downtrend trading territory, as always, and no trends and downtrends. Number one priority is preservation of capital. Went into a no trend early last week. So on the 19th, we closed above the 10 and the 50. Went into no trend, never got a close above that high. Yes, we gapped above, but didn't close above it. So still no trend. And then once again, Thursday, gap above again, just to sell off, closing below the 50, closing below the cloud, giving back all of the gains. And then on Friday, just getting completely destroyed. So something that I'm noticing here in this price structure that is significant. A couple things I want to point out just from a technical price structure, way to view the market. So we have a nice run, a nice uptrend, multi-day rally, and we'll pull up some 200-day moving averages. But you can see we rallied up to this price area back here, tested that price range, and it also coincided with the 200-day on the Nasdaq. But on Thursday, you can see gapped above and just gave it all back. This is very significant. And then more follow through to the downside on Friday. This is not the price action that you want to see, especially when you're, coming out of a downtrend, rolling back up, putting in a base, getting a rally, gapping up a couple days in a row just to completely puke it all out is not the price structure you want to see. So this price structure, to me, these past two trading days is significant, and all signals to me point like this market wants to go lower. So I know we've had our bear hat on, since we've been in, closing below the 200-day, especially with the Nasdaq, the Qs. You can see this 200-day is now starting to roll over. Not what you want to see, especially when we're heading into the thick of tech earnings seasons. And I'll say this, we've got some big tech names coming up. We've got Apple, Amazon, Google, the big major market movers, coming up in the next couple weeks with their earnings. And if they don't come through and save the day, kind of look out below is going to be my market thesis. And if we take a look at the S&P, where does that mean we can come? Well, we do have some gaps back here, and I don't want to get too extremely bearish, but we do have some gaps back here that have never been filled. So coming back, significantly, going full bear market mode, is definitely not ruled out. The Fed is against us. They're not on our side anymore. They're tightening, and we also have geopolitical risks. So you could put any number of reasons on why this market would pull back. But until the price is back above Thursday's high, this is a very important level. So Thursday's high is a pivotal high above the 200-day, and this was, a very significant level. Until we can get back above, call it 450.25 on the S&P, on SPY. So above 450.25 on SPY, I will take off my bear cap and I'll put my bull cap back on. But until then, from a macro perspective, this does not look good. So I am definitely bearish and protecting capital. And if you have them year-to-date gains is going to be the number one priority. And yeah, you don't have to short the market. There are going to be opportunities intraday if you're day trading. But once again, when we do get an uptrend, the rallies will be vicious. So we'll be able to get some volatility on our side. But this has been a difficult market. I'm not going to sugarcoat it. There's only been two uptrends this year, and one of them really was one that paid really well, and the other one you had to be scaling and using stops. And if you weren't doing that, probably was a little bit more challenging. I wanted to pull up this IWM small caps. This chart to me is a screaming short. I think this is definitely something that, we may take a look at this week if we're, trying to be extremely aggressive and, make some money on the downside. Definitely small caps and tech. NASDAQ is where I'm going to be focused. Maybe tech is a little more touchy just because we do have some major earnings coming up. So keep a close eye on the playbook this week. Crypto, as well. Thankfully, it didn't get destroyed like the S&P did on Thursday and Friday. It has been trading somewhat similarly to an equities market, which I really don't think that it should be. But that's beside the point. The price action is the price action. Until Bitcoin can get back above the cloud, and really we'll call this candle's high, which was we'll call it 43,000. So above 43,000, I think you probably could make a run up to this 200-day. But you can see this 200-day once again acting as some major resistance. So until we get back above the 200-day, and we have a 50 and a 10, and this cloud moving higher, that's when I'll get really bullish crypto again. Right now, is really just not much to do. Ethereum, similar story, basing below the cloud, below the 200, not bullish price action, but also, not extremely bearish either. I'm kind of pleased that it's held up in this range so far. But like I said, we do need to see price back above for Ethereum, really back above the 3,600 for ETH before I think it can make a run to new highs. So what am I doing this week, right? We want to obviously talk about price structure and then how do we approach this week? So yeah, I'm definitely having my bear cap on, but I'm really not trading because I'm not somebody who wants to be net short the market. I'm a firm believer that over the long term, a market wants to go higher. So focusing on the long side over the long term is definitely going to yield, better consistency and more return. So protecting capital and just being patient, sitting with cash, waiting is the name of the game for now. If you are an extremely experienced and aggressive trader, there will be some short setups on the playbook that you can absolutely take advantage of, especially with the weakness in this market. But that being said, you never have to short a market to make money. There's always going to be money to be made when odds are in our favor. And being patient is likely the best move with the market that we're currently experiencing. With that, I'll leave you guys and I'll see you on the open.